Shall we start? Okay. Good morning, ladies and gentlemen. I'm G. Balachandar from Hindu Business Line. I welcome you all to the discussion on will automobile sector regain its mojo this festive season. This is the third in the series of conversations being organized as part of the Hindu Group's ongoing campaign, Tamil Nadu Smiling. This one is about auto sector. We've done it a couple of other webinars in other sectors. You may be aware that Indian automotive sector accounts for 7.7% of the India's GDP, making it is very vital that it does well for the country's economy to grow at rapid pace. The sector employs about 35 million people and accounts for more than 4% of India's exports. You know, the auto sector was through a tough period even before the coronavirus pandemic reached Indian shores. The pandemic actually accelerated the fall in the segment. However, after the gradual easing of lockdown, sales began to revive, with sectors showing demand revival in rural areas, which were relatively, less impacted in the initial period. In the past couple of months, urban centers and cities also started to show revival in demand due to complete lift of lockdown and drop in COVID-19 cases. So most of the segments of the auto industry have been reporting better sales and improvements in the capacity utilization levels. So we are going to discuss as the sector regained its form, will it sustain beyond festive period? We are going to discuss this demand revival and challenges ahead with the three eminent panelists from the auto sector. We have Mr. Santosh Iyer, Vice President Sales Marketing of Mercedes-Benz India. Mercedes is India's largest luxury car brand. And Mr. Narayanan Sundararaman, Head of Marketing for Bajaj. Good morning, Mr. Sundararaman.
Hi.
And Mr. Arul Chelvan, Executive Vice President and CFO from Cholamandalam Investment Finance Company, one of the leading NBFCs of the Murugappa Group. Okay. So I'll quickly give good morning to all, Mr. Santosh Iyer, Mr. Sundararaman, and Mr. Arul Chelvan. I will quickly give a brief introduction about the panelist. Mr. Santosh is the head of Vice President Sales and Marketing and the member of the leadership team of the Mercedes-Benz India. He has been associated with Mercedes-Benz for a decade and has headed several important functions in the company. Prior to his current role, Santosh was responsible for customer services, corporate affairs, CSR functions at the company. He played an important role in driving service differentiator as a key parameter towards achieving service excellence and customer loyalty. And Mr. Narayan Sundaram is as the head of marketing. He's responsible for developing branding and marketing strategies for Bajaj Auto's portfolio of brands. He's almost he's been in here the company for almost 3 years. He has had several innovative and path-breaking brand marketing campaigns for the company. He brings over 25 years of experience in marketing, strategy, and leadership roles across multiple sectors. He has worked, prior to this, he has worked in many multinational companies like Cadbury's, Modelers International, ITC Limited, other companies. Mr. Arul Chelvan is the CFO of and Executive Vice President of Cholamandalam Investment Finance Company, chartered accountant, and an MBA from the Open University UK. He has over more than 3 decades of experience in finance and management, which has spent more than 20 years in the Murugappa Group. He now heads the finance and treasury function at Cholamandalam Investment for the past 12 years. Thank you, gentlemen, for joining us in this seminar. I would like to start the discussion by asking the experts to present their views on the present demand scenario initially. Then we can take it forward. I would like to start with Santosh. Mr. Santosh, though your industry's demand patterns are different as compared to the mass car segment, how was the impact of COVID-19 and the revival post-lockdown? Would you start?
Yeah, frankly, for a luxury brand like Mercedes-Benz, we were quite skeptical. When this entire COVID happened, we all had zero sales almost in the month of April and also in May. And then there was a lot of speculation on V-shaped recovery, U-shaped, and how this will develop. But frankly, from June till date, month on month, we have seen a 25% growth. And this means that by October, we have almost come down to last year levels of sales. Let me also clarify here, because there has been a lot of debate between retail and wholesales. We are the only brand to declare retail numbers. We never declare wholesale numbers for the last 10 years. And as a policy, we only give out retail. So there is no wholesale numbers in our data. Of course, we only give quarterly, we don't give monthly. But to state true to the fact, we give retail numbers. So all we can say is in October, we have almost come back to last year levels, in spite of not having key volume models like the A-class limousine and the GLA, which almost forms 20 to 30% of our portfolio. So I think that's been a remarkable comeback, which bit I can say exceeded our expectations also in terms of the time frame. How is the current Diwali looking at what we see? And today is being Dhanteras, we took a numbers also from our dealers and partners. I think we will again be able to do similar to last year levels. I think for the Dashera period, we did close to 500 odd cars, and now we look at 300, 350 odd cars to be delivered today. So I think the Dashera Dhanteras period, close to 850 odd cars, we should be able to deliver, which is similar to last year, because last year was also close to 800 odd cars at this period. I'm saying luxury cars. When you look at mass market, and we also follow that closely because we look at a correlation between what happens there and our segment. And I can state two data points. One is the CM data, which is close to 3 lakh cars that they sold in October. And then you have the FADA, which is a Federation of Dealers, who have released retail data. And this retail data excludes 3 to 4 key states like Telangana, etc. And if you look at that, their data also talks about 2,49,000 cars assets. So the difference between both the data is 50,000, and if you add couple of states, the difference comes down to 20 to 30,000 units. But I think what we should all not forget is 2,70,000 odd cars have sold in October. It's not a small number. Of course, the India market is huge, and that's something also remarkable, because 3 months back, none of the pundits, none could have even forecasted that we will come back to such a level. So it's great in terms of where we are. Of course, could it have been better? The answer is always yes. But I think as a country, as a market, to come back to almost last year levels post-COVID, we would say is a good starting point for the next year.
Okay, good. Thanks, Santosh. I would like to ask Mr. Sundararaman. So we have seen a recovery in two-wheeler segment, mainly driven by rural markets initially. We all know that actually rural markets drive motorcycle sales as a major segment. While a major chunk of scooter volumes come from urban centers, bikes have seen some good revival driven by rural markets. So how has been the recovery in the bike segment, in the overall bike segment, and for Bajaj Auto as well?
Yeah, so as Santosh was saying, April, May, June quarter were pretty much locked down, so our sales did take a hit. Post that, the build back has been, I would say, steady. And within motorcycles, there are several segments. So you have the more entry level and the more commuter segment, which is behaving in a certain manner. That's one sort of cut that one needs to take a look at. And you have the sports segment, which is where brands like ours of Pulsar and Avenger and Dominar, as well as the higher end KTMs and Husqvarna are really playing in. So we're seeing slightly different trends. What we're seeing is that, and of course, the second part, and I must not miss that out, is the cut by urban areas as well as rural areas. So what we've observed is that, as was pointed out by you as well as Santosh, the rural area demand has been relatively robust, compared to urban centers. Now, urban centers, the problem really has been that there has been a sort of a stalling of mobility. So, when you look at it from a consumer dynamic perspective, when does somebody buy a new bike? They buy because, for example, students embarking on a new college year is a segment that goes and buys sports bikes. Now, the colleges are shut, and therefore the sort of a need for buying a new bike itself doesn't arise. So that's obviously taken a hit. Similarly, in the commuter segment, the entry level has been facing some amount of pressure. And I think that is because, if you look at the economic drivers, it's the blue collar service segment in urban areas that has been pretty badly hit. Now, whether it is self-employed, you can call them self-employed entrepreneurs or shopkeepers, they've all borne the brunt of, the lockdown and the sort of ceasing of economic activity. And that segment is, still, and I'm talking of just before the festive started, was still under a little bit of pressure. Coming specifically to the Navratri and Dashara, and we're at Dhanteras now, sales have definitely looked up. But again, again in our case, unlike the luxury end, the difference between the wholesale dispatches and the retail is quite vast, and for very good reason, because October saw the build up, and with 15 days of post Dashera going up to Diwali, that part of the retail sale is what we're expecting. So sales have looked up, but I wouldn't say that we are terribly pleased, in the sense that it's not as if we're growing at double digit or something like that. It is definitely better than the previous months. Where it lands up, we will know in a day or two. In fact, in another week, because there is some amount of buying just after the Diwali as well. And we are also seeing that the introduction of new models in our portfolio, like the Pulsar 125 and the NS 200 at the top end, have been received really, really well. We have a few new bikes in the KTM range, like the Husqvarna 250, the Adventure 250 that has just got launched. Those have seen a very good reception. Let me put it that way. So I think the top end with the introduction of new launches, the middle segment with the introduction of new launches has been good for us. But when I see the overall pie, it is cautiously optimistic. Let me put it that way.
Okay, great, interesting. And I'll go to Mr. Arul Selvan. You are the one who lends money to people to buy automobiles. In your view, how has been the recovery across segments? Have your vehicle loan disbursements gone up? Have you seen only fragmented recovery? In your view, how do you view this current revival?
Yeah. See, we our focus is more on the commercial vehicle. While we also do two-wheelers as well as passenger cars, our focus is to lend towards the light commercial vehicles, and predominantly light commercial vehicles. We also do tractors and construction equipment, and some parts of the heavy commercial also. What we are seeing is there is a good revival from a disbursement perspective. If you look at it, especially the commercial vehicle segment, they have moved up from the Q1 versus Q2. There has been a substantial improvement, primarily from all the 3 months being available for disbursement, etc. What we are also seeing is we are expecting that this festival season will bring in a little bit more demand for them. On the recovery front, as you would also be aware that the moratorium was issued for for the period up to August. So till that time, our focus on recoveries had been more restricted to overdue amounts, etc., rather than on the EMIs, and there was a standstill on the EMIs that had to be collected for predominant part of the portfolio. We had almost like 76% of our portfolio opting for moratorium. However, post that, in spite of there have been a lot of apprehensions being there whether the recovery from those who availed moratorium will it be forthcoming. We saw a good amount of turnaround from those people also. Almost 95% of our moratorium cases have started paying their EMIs. So this is in October, and in November we are seeing it September and October, and in October and November we are seeing again further improvements from what we saw in September by itself. So I think the recovery is coming up. The thing is the customers, especially in the CV 1 or 2 vehicle owner type of customers, they need to operate beyond the 70-75% capacity levels to ensure that they can comfortably pay their EMIs. I think they are on the very borderline, utilization levels, which is going to take a little bit more demand from the users of these transport facilities for them to be more comfortable in paying in the months to come.
Good, interesting. Mr. Arulselvan, in fact, there was a concern about price increases as a consequence of BS6 norms. I want to ask you about the two-wheeler lending scenario. Did more people opt for lending in the two-wheeler segment? How was the lending landscape in the post-lockdown period for two-wheeler segment?
See, two-wheeler, we are seeing there's not been too much of a disparity between this BS6 versus the BS4 norms in the two-wheeler. It is more accentuated in the CV segment. In the two-wheeler, frankly, we are not doing across the board. We are doing Royal Enfield, Honda, and predominantly Royal Enfield and Honda, and we do in select markets other brands. So our vehicles have already been more complying with the basics, the models which we have been funding. So we have not seen the shift or the shift being impacting our numbers. What we are seeing post lockdown is a little bit of a spurt in the entry level bikes because more people are wanting to have personalized vehicles rather than opting for a mass transit modes, primarily because of the fear of this pandemic.
Okay, great. Thank you. Mr. Sundaraman, I just wanted to ask you about this three-wheeler segment. We've been seeing, discussing revival in other categories, cars, two-wheelers, CVs. And three-wheelers, what has been the revival? I think it's also an important segment. Would you like to say anything about this three-wheeler category?
Yes, absolutely. I was hearing Mr. Arul also talk about commercial vehicles, and actually, I think the three wheelers is a barometer for economic activity, at least in urban areas, if not also across the country, because it is public transport for most people. And what the lockdown has done is, in fact, as people's mobility has been impacted, there has been a direct correlation with the fortunes of at least a three-wheeler commercial vehicle. I don't know about the others, but maybe it's the same with the others as well. And I think this is a case where, as things unlock, hopefully there will be some revival that comes in. Just to give you we track the earnings potential of our customers, and it is hovering at only about 50%. So, what Mr. Arul was saying, that people are, an entrepreneur, a three-wheeler driver is often I call the most brilliant entrepreneur there exists, because with limited means he is buying a vehicle and then every month is paying some bit back to run the vehicle. So it's actually earning, paying, and earning his livelihood, all three things at one go. Now, what the lockdown and this pandemic has done is it's brought that to a full stop. And because again, there is a lot of mobility is not happening. Schools are not open, colleges, malls, people are not going out. This segment has taken a big hit. So yes, we are not seeing a revival, and this is the primary reason for it. And hopefully, as the unlock happens, and we get better at managing this health crisis, and people become more confident about moving about with care, I think we should see some revival in this segment. But up till now, it's still pretty depressed.
Good. Thank you. The government has been coming out with many schemes to spur demand. We've seen many initiatives coming from the government side. I think auto industry is also done its bit to maintain some momentum and creative positive sentiments post-lockdown period with the new launches and easier ownership schemes, new schemes and all attractive schemes have announced. I would like to start with Santosh. Santosh, I know Mercedes has been making things easier for people to own the brand. A lot of, easy entry points have been introduced. Have you done anything significant during this period to create some momentum and attract buyers?
Well, I think there is a very famous quote. It says, "Never waste. Let a good crisis go waste." Make use of a crisis. And I think somewhere when the COVID happened, we had some learnings from other markets like Korea, China, and others, even in Europe. And we said that this is the best time for digital transformation because customers will be forced to do it. Our dealers will adopt it much faster. And this is where we significantly ramped up our e-commerce initiative. we started an online platform for dealers, which is nothing but an e-commerce platform. And there we were able to convince dealers to put up inventory, put up stock, put up the best pricing, and be transparent with customers. So this, we couldn't have even imagined it in a non-COVID scenario. And I think they were all keen because the future was a bit uncertain. And now when we see, we have almost 20% of our sales are digitally triggered, and 4 to 5% of our sales happen pure online. That means a customer comes online and books online. This again, this rapid acceptance of digitalization is something I think the crisis gave us. The second thing we can say when we look at our business model is also on the ownership side. Of course, we with our financial service partners, we have a lot of schemes like agility, low down payment offers. We have recently tied up with SBI also to try to reach more tier 2 and tier 3 markets. But fundamentally, the customer behavior, we are finding new use cases. They want to buy luxury cars. Now, for example, people don't use air travel as much, but they like to travel a Bangalore, Pune, or maybe a Delhi, Chandigarh more than using flight. So these are new avenues that we are finding which never existed in the luxury segment in the pre-COVID era. But yes, for us, we at the same point we have supply shocks because we are not able to launch our the new A-class limousine. We are not able to introduce the GLA because we are not able to do these startups in India because of all the supply chain challenges. So we are missing out on the so-called entry-level bracket. But we changed our focus entirely to top end. So, even in these times, we have invested 400 crores now. We are doing localization of AMG, for example. These are cars which used to be a crore plus, but now we are trying to bring them to the 70-75 lakh bracket. Of course, they are not entry level, but, for an AMG available at 75 odd lakhs, it's a great proposition for performance enthusiasts. So we are doing something there and trying to make it the AMGs affordable, for example, for a large segment of performance enthusiasts. But otherwise, we have to wait for our cars like the A-class limousine and the GLA, which will come only early next year. So I think when we look back the last 4 to 5 months time, digital transformation, shifting to a Fiji digital model, because even dealers use both digital as well as personal consulting. I think these are something new trends, very fast adoption of these trends, which we could not have envisaged in a normal scenario. So that's something, a big takeaway for us from this crisis.
Excellent. Interesting. The digital part is really interesting. Mr. Sundaraman, was there any structural changes in two-wheeler due to COVID? Because there is a view that two-wheeler will be the major beneficiary of this social distancing norms and other things. And also cost was also seen an issue. Was there a preference to lower CC bikes? How was the trend in the two-wheeler segment?
Yeah, well, we are not seeing that much of a structural shift as you outlined it. It is true that people say that people will prefer personal transportation over mass transportation. But if one just looks at the numbers, it is not panning out as yet. Now, whether that is because we haven't truly unlocked, whether that is because people rather than buy a new motorcycle have gone to the second-hand market, one doesn't really know. One can sort of conjecture that possibly that's what's happened, because the acquisition cost of a motorcycle has gone up in the last couple of years tremendously due to a variety of regulatory reasons. And, we are where we are. I mean, BS6 added a significant amount of cost. Before that, there were some safety regulations which we had to comply with. So all of this has taken up the acquisition cost of motorcycles. Now, whether that has had a role to play in challenging economic times is, I think, the key question. So we're not seeing, to sort of have a short answer, we've not seen a structural shift. What we have noticed is that the demand for wherever we have introduced new models and something new, like the Pulsar range has got refreshed, we've seen some good interest and good conversions. Just to add to all the things that Santosh said, of course, digital is something that we have, not just us, but our entire network has taken to, because it made a lot of sense. I think some of the old rules don't change. I think if one puts out an exciting new product lineup, new models that are relevant to customers, is they do attract customers, and they come and purchase those bikes. So it's the same old rules, I would say. So nothing deeply structural has happened as of now.
Okay, thank you. Mr. Aruchalvan, in fact, we've seen recovery in CVs in the last couple of months. Of course, CV was going through a tough period even before the COVID. Last 2 months have been showing some kind of improvements. What has actually driven that? Is all the issues of the CV industries is getting are behind? And how do you view this recovery in the CV segment?
See, the recovery, what we are speaking is on a low base. As you rightly said, even last year, the CV industry went through a lot of crisis, and the growth in last year itself had also been muted. So base is that, if you take that as the base, the current 2 months looks better. Especially if you see last year, Q1 was a good quarter, Q2 was a reasonably okay quarter. Q3, Q4 were the bad quarters. And the base of that now will start to pan out to be as if it is a good quarters. Yes, thankfully it is not worsening. It is, it's staying where it is, and it's moving up. And within the CVs, if you look at it, lights have made a recovery, and it has always been the case. Lights have a better utilization, so they come up quickly back to normal in any downturn. And so they are back. They are fairly here, as at least up to the last year levels. But the heavies are still lagging behind. So it will take some time for the heavies to come on, and we also got to see how the government will incentivize and bring in scrappage policies, etc., which could help boost this segments in the long run. Right now, the heavies are still lagging behind, but I think the lights will come, and lights also have a more more tuned towards the rural. So there is a good amount of recovery happening. And tractors are back to normal fully, and some construction equipment is also back to normal. But heavies will take longer time.
Okay. And who are the people buying these trucks? You see sales happening in the tipper segment or haulage segments, and where do you see the initial demand coming from?
See, this is more on the general purpose goods transport. It's not like the tippers and haulers, etc. So it's still not picking up. It is if you look at it, the transportation segment opened up even somewhere middle of May itself. Restrictions on movement had been progressively been relaxed from there, and essentials, etc., had been moving. Yes, there are certain segments like Sundaran said, like the school bus segment, and then the transport of employees of buses, buses used for transportation of employees. Those segments have got impacted, and it continues to be under stress. Whereas the general purpose usage, especially where the usage is fungible, that is, you can use it for transporting today FMCG, tomorrow poultry, day after tomorrow you can use it for doing vegetables. Such segments quickly find avenues to use their vehicles and put them to use, and that's where I was saying earlier, capacity utilization has not been great, because there's a lot of competition out there, trying for the same amount of freight that is available.
Okay.
That's the key.
Okay. And the pickups, we've seen some improvements. Is it because of the strong rural demand, strong rural economy has driven that pickup segment so that agri commodities could be transported to the nearby centers? We've seen that some improvements happening in the pickup above 1 ton mini truck, small truck segment.
You are absolutely right. Rural is driving the good amount of demand, and that is where the bulk of the sales is happening. Thankfully, we have got a good amount of branches across the country, and more skewed towards the Tier 3, Tier 4 type of towns. So we are able to capitalize on this demand.
Okay, great. So we all know that demand has come back as lockdown has gone, but the COVID has not gone. So as we continue our battle against COVID-19, we are also looking at the sustenance part of the demand. So will the current demand sustain beyond December, January? because we are all aware that long-term auto demand is a function of economic growth. Government has also come out with many schemes to spur demand in the initial term. What are your views on the sustenance part? I would like to start with Santosh.
Yeah, I think that's a $1 million question, Bala, that you are asking, and it's a bit like crystal ball gazing. So we tend to be cautiously optimistic right now in terms of our outlook to the market. As you rightly mentioned, the overall economic activity has to spur up because right now it's also some pent-up demand mixed with some people buying, revenge buying kind of a thing. Fine, let me spend in some good things in life, or some people are buying it for a social distancing norm. So there are different use cases currently, and it also the best time to buy is a festive season in India. So it's a no-brainer that yes, this is showing at least some positivity. What happens from here on? December generally is a lot of deal seekers come in. They still buy at that point of time, and then we transition to next year. Couple of things. One, from the automotive industry, our view is the new launches will continue to excite the segment. So manufacturers who have newer products in their portfolio, brand new refreshed products, they will still be able to excite and get the replacement demand in. We have seen that with the GLS. We launched this car. It's 1 crore plus somewhere in the month of July, and even now we have 3 months of waiting period for that car in these times. And these are good 3-digit numbers, not small numbers. So that shows that clearly new models excite the market. So it's up to manufacturers what they do. The second thing is, will the government also live up to the talk? There has been discussions on scrappage policy and many other areas, supporting, and also maybe a relaxation of some of the regulatory topics, new compliances that keeps coming in. So as long as the industry, automotive industry, gets that support, I think we will be able to still move along, and maybe as something like the scrappage policy should definitely lift up demand in the market. The last, not the least, is of course the overall economy. And here, I think yesterday, day before's announcement by the Honorable Finance Minister, it's good. The positive way to look at it is at least the government is aware that the economy is slowing down and they need to intervene and correct. But the big question is it enough? And there are many indirect support measures. And when we look at some of the other markets, there the government interventions has been more direct, which leads into consumption on an immediate basis, whereas the current set of the current set of outlay that has been done is all indirect, which is good, but it may take a bit of time to trickle it down, and then for the wheels and the cogs to start turning again. So we are optimistic. We have, I think, if you have to go back from June to December, what has happened, that gives us some hope that, of course, even the next year first quarter should also resonate a similar demand picture. But yes, it's the way you look at it also many a times, half glass full, half glass empty. But we would like to look at it as half glass full right now, for the demand side.
Thank you. Mr. Sundaraman, will personal mobility drive some demand in the post, you've hinted about the post-festive period, as COVID is unlikely to abate till we get a vaccine. The first half we have seen the strong rural economy, and second half also there is a outlook about a good rural economy. So how do you see the demand post the festive season for two-wheelers?
So, like Santosh mentioned, we'll have to wait and see how it goes, because again, crystal ball gazing is not something that we are very good at. I think, see, Diwali practically is middle of November, right? So I think post that there is normally a lull, and then December is end of the year. So we're really talking about Jan, Feb, March. And it's good that the government is also recognizing that, something needs to be done as stimulus. I think the key point is how much of that actually translates to, actual in the hands of people. Because right now, one could come to the conclusion that essentially it's sentiment that needs to be bolstered. Consumer sentiment is depressed due to a variety of reasons related to the health crisis. Also, incomes have taken a hit and all of that jazz. So really, let's see what this translates into. Whether, as Santosh was saying, there's a lot of indirect measures. Now, how much of this lands up in the hands of customers, we'll have to we'll have to really see. Regarding personal mobility, this is something that we've been tracking since May, because since May there has been this hypothesis that there'll be a huge demand and spike for personal mobility. Our own research, if you can call it, talking to customers who purchased, indicates that it is about the reason to have your own two-wheeler rather than rely on public transport, and that as a stated reason for purchase is not more than 30%. I don't think we are seeing the huge sort of expected wave that suddenly everybody wants their own two-wheeler. I am not seeing that. Whether that happens post post Diwali, we'll have to wait and see. Because as I said, large parts of mobility as an industry have remained very subdued. People requiring or wanting two-wheelers to, say, for example, go to college. That has not been unlocked. A lot of offices are now still work from home. In the southern metros, in Chennai, in Bangalore, we know that there are tales of how the IT workers have relocated to their hometowns, and their employers have said, "You please, operate from home." So all of this also contributes. If there is no mobility, then I don't see personal mobility there being a demand for.
Okay, good. Mr. Arulselvan, I think, in your case also, during the COVID phase, most of the segments were impacted, and one by one, we could see some revival in autos categories that you lend to. So what was your approach? What was your lending approach post-lockdown? Did you focus on any specific vehicle segment during this period?
See, during the first 2 months, of course, there was a complete lockdown, so including our branches, so we were not able to lend much, and those 2 months we lost out on the disbursements to a large part. So we did do some small numbers. But post that, our focus had been, and as usual, as always had been, we have been more on the CVs, as I was saying, and CVs, as especially the lights and mini lights, have been picking up, and we are also into used vehicles. We capitalized on the tractor demand which was there in the Q1, and the construction equipment, at least the smaller varieties of construction equipments of some specific models or specific manufacturers which had a good demand. If you look at it, tractors has come back to normalcy and even slightly improving its last year's growth levels. And construction equipment has also been growing, so we capitalized on that. We did a large chunk on these two segments, plus on the light commercial vehicles. So the light commercial vehicle, especially in the rural, had been a reasonably good demand. Used vehicles, we expect a lot of churn to happen in the coming months, because there will be certain segments who would want to dispose of their existing surplus capacity, and there will be others who would want to try their hand. And so we see a lot of churn in this, especially come from the context that those vehicles which may come up for sale would be of BS4 category, and the replacement cost being BS6 category being very expensive comparatively. There would be a good demand for such used vehicles in the commercial vehicle segment. So we see some amount of traction, amongst both the new and the used in the coming months, and in the uh, and I hope the utilization pattern is improving. So and then there will be a good amount of repayment capability of the customers also coming up.
Okay, great. On the tractor side, of course, the H1 has been a very good period for tractors. But there's a view that there could be a moderation in the December quarter. Then again, the demand will start picking up from January month. How do you view that pattern?
Yes, tractor is a seasonal product if you primarily focus only on the agricultural application. But progressively, what is happening is tractor applications are being looked upon both for an agri purpose as well as for other applications like constructions and rural development, etc. The government's focus on rural development helps the investment in these vehicles because people lend or rent these vehicles to the projects, and thereby they get, they get to earn more or throughout the year on such investments. So tractor demand, yes, it will see some dip during non-seasons, but it will pick up. But I think the tractor demand is good, and the good part also is the repayment track record of these customers have also been consistently very good. So that is also a positive for us, and that's where we are focusing more on this segment.
Great, interesting. One question to Mr. Sundaraman and Santosh. We've heard that OEMs withdrew requirements for the minimum stock holding in showrooms, so that by freeing up capital, some capital, easing for dealers. Was that a case in the two-wheeler segment, Mr. Sundaraman? I would like to ask you this question.
Sorry, I'm sorry, Bala. Could you please repeat the first part of your
Yeah,
question?
I will. Basically, we've heard OEMs withdrew requirements for the minimum stock holding in showrooms, thereby freeing up capital somewhat for dealers. Did that happen in the two-wheeler category?
Um, uh, no, I wouldn't say it happened in our case. I don't know about the other OEMs. I think one of the facts also is that, April, May, everything was shut down. June and July, though, things opened up, there were major disruptions in the supply chain. So, depending on where one's manufacturing unit was located. So, for example, ours is in Maharashtra, and the unlock was a little slower due to a variety of reasons than we would have liked it to be. So supplies were constrained, and therefore, there is always, if supply is constrained, then the stock holding at dealer points automatically comes down a little bit, because assuming is normal sales. So we didn't do anything specific to adjust this, but we believe in keeping a very close eye on making sure that our dealers have a healthy stock holding, so that we don't miss out any consumer demand. And it is so it's been pretty much business as usual, but we did have supply issues certainly in the month of June and July, due to a variety of reasons. It all got ironed out thankfully by the time the festive season rolled in. But yes, initially we did have some problem.
Santosh, did you have any stock adjustments due to this tough period in your company's dealership business?
Yeah, so basically, we went into lockdown around 15th of March, and March is one of the highest sales month in the year. So the dealers were definitely stocked up for the month of March, considering that it was a high seasonality month. And then the lockdown happened subsequently. So dealers were carrying stocks. What we did is when we restarted operations, there was no stocking criteria for dealers. We allowed them to completely destock because they still had a couple of months of stock with them. And I think the last 2 months we have seen an excellent demand from the market. We have come back to almost normalcy in terms of the stock situation. And in fact, the stocks are much lower than what we started the year with. So I think the situation has been normalized. Also, one of the fundamental reasons we need to steer this is because these carry huge interest costs. We are a high interest rate market, so it affects the dealer financials also. So we have given certain flexibility, but now for us, it's almost business now back to normalcy. So we have come back to the earlier levels, be it in terms of stock, be it in terms of the total ratios that we are operating currently.
Okay, good. I would quickly ask one question and request for brief answers. Then we can open the debate for opportunity for the viewers. Has the capacity utilization level improved, reached to the pre-COVID level for both Bajaj and Mercedes? Mr. Sundaraman, I would like to start with you.
No, in a very simple answer, no. We are not at 100% capacity by any stint of imagination.
Okay, Santosh.
For us, even before COVID, we were not at 100% capacity utilization. We have such a huge plant in Chakan. So, of course, we are waiting for the growth curve to come and, of course, utilize the full plant. But if you have to see, are we now back to pre-COVID levels? The answer is yes, excepting two models, which I mentioned earlier, which has got delayed in terms of startup, and that will only come in Q1 of next year. So, otherwise, rest of the models, we are almost same as pre-COVID levels.
Great, great. Thank you so much. In fact, I would like to create some opportunities for the viewers to ask questions. We have a few questions lined up. I will just quickly read out. Ms. Kanishka Sujukar, his question is, how did you manage sales in COVID-19? Santosh, you would like to start?
So I think we discussed this topic earlier that when the lockdown happened, there was no sales anyway. So the only thing we had to manage is people, and the first and foremost for us was safety of our employees, safety of the stakeholders. So our entire focus was on safety, community development, looking at our dealer partners, etc. Sales started somewhere in June when the lockdown started opening up. Again, it was not a uniform open up. Some states opened up faster, some slower, some again went back into lockdown. So it was a time of crisis, and I think at this time we needed to be agile. We had to set up ourselves, be it in terms of marketing, sales, distribution, based on this dynamic situation. And of course, I think for us, digital transformation, trying to reach customers in a new format, or trying to offer them financial solutions. These were the two big things to manage sales and trying to steer out of the crisis.
Mr. Sundaraman, you would like to say something about how did you manage the sales?
Yeah. So pretty similar to what Santosh said. I mean, we first and foremost was, we utilized the time, of course, safety and making sure that everybody's secure. As things started opening up, we did two things, which I'd like to highlight. One is that, because a lot of vehicles would have been standing still, we first focus on the service part of our business. So in order to, and a lot of people whose bikes would have been standing would have seen the battery sort of get drained out and other mechanical issues. So we announced some incentives. For example, free battery charging is something that we announced so that people could come in to our workshops and get their bike serviced and get it ready once again, after 2 months of it standing still. That had a very good response. So that sort of kickstarted our dealership activity, let me put it that way. I think then on the sales side, we utilized the 2 months to strengthen some muscles. We expected that there will be a lot of digital interest. So, a lot of our dealerships, dealer partners needed to be become more savvy at digital marketing and sort of the digital purchase cycle. So we did a lot of work to get that in place and improve that at the dealer end. And so that by the time the full unlock happened and demand levels increased, obviously a lot of customers were doing their discovery and their decision making online. We had enough stimulus and enough ways in which we could fulfill their requirements. So that's how it went for us. That's how we managed both service as well as sales in the during this difficult time.
Okay, good. We have another question from one Mr. Ranganathan. His question is bank credit freely available to dealers to fund working capital? Mr. Aruchadan, would you like to respond to this?
Yeah, see, bank credit, yes, bank credit is available. Actually, bank for dealers, credit is available not only from banks but also even from manufacturers as well as from NBFCs, like as where we give them some working capital. So sometimes even interest free for certain small period of time, like let's say a week or 15 days back. So it is available, but I think during the pre-COVID itself, there had been a little bit of stress on the dealers funding from banks, primarily because of the lot of stock being piled up, and that was the issue with the dealers' repayment capability. So I don't think it has got nothing to do with COVID, and post-COVID, I mean, because of the new government initiatives, that they are eligible if they fall within the eligibility criteria, and they should be able to get.
Great. We have another question from Mr. R. Anand. Is there a case for a long-term automobile policy to maintain stability and momentum to this sector over a five-year time frame? Santosh, you would like to say something?
Well, it's a good question, because it has been a long-standing request that automotive industry comes under one vertical, because Technically, we report to the Department of Heavy Industries. Policies are formed by Ministry of Road Transport and Highways. We have interventions from Ministry of Environment. The budgets and all this, for example, the scrappage policy and many of the duties are all levied by the GST committee or the finance ministry. So technically, like IT, IT reports to the PMO office, or you have a separate ministry also now, which is dedicated. Automotive industry has been asking this for quite some time. We contribute 7-8% of GDP, a lot of jobs there, but it's a fragmented, and in that sense, decision making sometimes becomes slow. That some of the policy making also, there are challenges because of these topics. So there's been a long-standing ask, I think, from us as CM and others also, is what I can say, to come with a roadmap. But yes, the government has its Mission 2025, 2026 plans, 2030 plans. But in these times, neither the government, neither the manufacturers can look at such long-term view, because nobody could have really planned for what happened in 2020 as such. So to give credit, long-term planning is great. What we are right now looking forward is policy consistency. Maybe we have a nodal agency within the government also to take care of the industry request as such, and that will also for sure help in the long-term stability of the automotive industry.
Great, thank you. Mr. Sundararaman, your views.
Yeah, I mean, I echo what Santosh has said. Nothing sort of much to add, but just one point that if one looks at, I would possibly hypothesize that it's been over-regulation is, causing some amount of stress as far as the two-wheelers are concerned. In the short span of, I would say 18 months, the cost escalation on two-wheelers has been, very, very high. I mean, it's almost to the extent of 25 to 30%. And, no matter which industry you're in, if you're going to see your cost and therefore your price increase by 25 to 30% in a 18-month period, I mean, demand, it's a fundamental law of economics. I mean, that there will be a problem. So, yes, I would, for a variety of reasons, as Santosh has said, plus, I think we need some stability in the regulatory framework. Nobody is saying that you don't have some of these measures, but it's a classic tenet of change management. I mean, don't make too many changes at in a short span of time. So if you look at it from that perspective, I think some stability on that front would help a lot.
Good. We have another question from Mr. M. Anand. Has the lower oil prices due to the pandemic taken the focus away from electric cars? There are very few launches in the electric space in the PV segment. Santosh, you would like to answer?
I think to assume that electric cars it's just a cost of ownership shift. That means if you drive an electric car, it's cheaper than an IC engine. That's a different segment. If you see, from a cost benefit analysis, what will happen right now, the way we see in the automotive industry is manufacturers like us will feel that we are also ethically responsible. We believe in sustainability. And when we say sustainability, this is not about tailpipe emission alone. It is about the entire value chain, how you make a car, how you produce them, and how you recycle them. So with that in focus, we are committed as Daimler, as Mercedes-Benz to, be 100% carbon neutral by 2039. And though it looks very far off, but we have also put some targets. Like, for example, by 2030, we are saying 50% of our cars will be electric, and which means we have to start now to reach that 50% target goal. So many of this will be led by manufacturers also offering the technology which will take care of, say, today, one of the biggest disablers is the range anxiety. People feel that, where do I charge? How do I charge? And as long as with new technologies, we just launched the EQC with a range of 450 kilometers. We now see customers again, they don't need to charge for a week, and on a weekend just plug in and then the car is charged. So, this is something for manufacturers also to offer newer, latest technologies. When it comes to Indian context, we see the first wave may come from two-wheelers and commercial vehicles also to a large extent, a bit led by regulation, because I think the government is still struggling what to do there. There are state governments with excellent initiatives. They are also trying to give away registration fee, and the cost of ownership is down. But to be very pointed back on the question, to expect the market to shift based on oil pricing is a big ask. I don't think that will happen anytime soon. It will happen because of manufacturers introducing newer products, commitment to sustainability, and government also making regulatory changes, be it in terms of CAFE norms, be it in terms of the overall incentivization on EV, which will lead to more adoption of electric vehicles in India. As such.
Great.
That's our belief, at least.
Great. Interesting. I have a question from Ritu Joseph. Despite the reduction in sales, which the scooter segment witnessed even before COVID, will it regain the momentum considering the new personal mobility requirements among urban and semi-urban customers? I know, Mr. Sundaraman, you don't have a scooter portfolio. I understand, but can you respond to this?
Oh yeah, I mean, not participating in the segment is very liberating. I can say whatever I want. But no, but jokes apart, on a more serious note. So I think the scooter segment, it's a bit more complex compared to motorcycles. Scooters are a more universally driven, vehicle. What we've noticed is that in urban households, everybody in the house, and that's one of the primary reasons for buying a scooter, is that it can be used by any member of the family. So given that, I think the key to scooters expanding will once again be the same. How does economic activity sort of revive, and does mobility play a role in that? And again, every member of the family, are they mobile? Do they have places to go to? In which case, I think there will be a fundamental demand saying that, okay, let's have one for each member of the family, and then people will choose. So I think it will follow that pattern. But as I said, we don't participate in scooters, so easy for me to say. Maybe you should have somebody from one of the scooter manufacturers really answer this question.
Anyway, thanks for that answer. That's quite interesting as well, of course. I have another interesting question from one Mr. Abhishek. Mass players like Maruti, Toyota entered subscription business recently. Will this impact the actual passenger car sales? Santosh.
So when you look at what is being offered in terms of subscription, it is nothing but leasing, which is repackaged into subscription, which is great because all of us have been offering. For some reason, leasing has not taken off in India, and I think one of the major reasons is a high interest cost. When you compare it with a market like US and Europe, 70 to 80% of the cars are bought on lease, whereas in India, it's higher purchase. And it's also because what you do in a lease is a substantial part of the car cost is to be taken care by the residual value at the end of 3 years or 5 years. And that, however, has to be financed. That has to be financed by financiers. And with a very high interest cost, the monthly payment goes significantly higher. So even when I look at subscription, the models offered are great, but it's up to a different mindset, to just use the car for 6 months, 12 months, I change my car. And frankly, it's picking up. The kind of consumers are a bit different than the normal people who buy these cars. There are very different industries who are picking up subscription, but it's still at a very nascent stage. And as I said, this is just a repackaging of the leasing. And if leasing couldn't take off very fast, even subscription will take some more time to pick up. That's our view right now.
Just one last question. One Mr. Hariharan has asked this. Will COVID cause price reduction for four-wheeler and two-wheelers? Mr. Sundaram, would you like to respond to this?
Will COVID
cause price reduction for four-wheelers and two-wheelers?
It's a very difficult thing to assess, because I think it'll all depend on the taxation structure. If, for example, the GST on two-wheelers, which is at 28%, which is the same as a luxury, what they classify as luxury, if that comes down, yes, there will be some pass-through and there will be some reduction. But I think people must also understand that there is a general inflationary trend in a lot of the cost inputs that go into making of vehicles due to a variety of reasons. So it's very difficult to say that, and a very simplistic assumption that, when demand falls, you reduce the price and then it goes up. I think because of these cost reasons, it may not be as simple as that. But yes, if there is a sort of a taxation relief, then that could stimulate demand, because there will be some pass through of that taxation relief to customers.
Okay, great. Just one question I wanted to ask Mr. Aruchelvan. Vehicle makers and others have leveraged digital and technology to a greater extent to sort of attract buyers, to create an atmosphere of buying experience. I heard Chola has also done it. How was the leveraging of technology helped in this period for you?
From a lender perspective, technology has helped us in assessing the credit quality of the customer, and trying to bring in the analytical capabilities to predict their repayment, behavior. That's been the big advantage. So our underwriting models are much more digitally enabled, and while also the collection forecasting model is being digitally. However, one thing is we need to physically be there to collect, especially in crisis times like this, because ultimately you can't sit in one corner of the country and expect everybody to pay. So some amount of personal persuasion, meeting customers and building relationship is required to ensure collection.
Okay, great. In fact, we've come to the end of the seminar. I think it's been a wonderful discussion with all the three experts, giving interesting perspectives. Thanks, Santosh, Mr. Sundraraman, and Mr. Arul Chelvan. Thank you for your participation. And you would like to add any final sum up if you want to add anything briefly?
So thanks for having us in the panel, and I would say again, best happy Diwali to all the viewers and to you and to the panelists also. And we just need to remember COVID is still around, so let's celebrate it safely. Take care. That's all. Thank you.
Okay, Sundararaman.
Yeah, happy Diwali to everybody. And I just I just want to make a small point. I mean, the theme for your this series, which is Smiling Tamil Nadu or Smiling, I think uh, I think that's very important. And yes, the virus isn't going anywhere, so we all need to be very careful. But I think we need to be a little optimistic and smile a lot more, even during these current times. And I think if we do that, automatically some amount of sentiment will improve. And wishing everybody a very happy Diwali and a very smiling Diwali. And I'm look forward to cheer and optimism over the next 6 months. So that's all I had to say.
Thank you so much, Mr. Sundararaman, for your feedback and wishes. Mr. Arul Chelvan.
Oh, nothing. Thanks a lot. Thanks for enabling us to join this conference, and wish you everybody a happy and safe Diwali. Thank you.
Once again, thank you all for your participation, and the viewers look forward to your support to our upcoming webinars also. A good day and wish you all very happy and safe Diwali. Thank you so much.
Thank you. Bye-bye.
Thank you.
Bye-bye.
Thanks.
Bye-bye.
Thank you. Bye.